US stocks are crashing as investors are becoming increasingly concerned about the surge in the number of coronavirus cases around the globe. The coronavirus situation in Europe is seriously deteriorating, and targeted lockdowns have now been introduced to control COVID-19. However, the greater concern among investors and traders is that these targeted lockdowns are highly likely to be translated into mini-national lockdowns to circuit break the transmission of coronavirus. If mini-national lockdowns see the daylight, it will be another significant blow for the global economic recovery. The coronavirus stock market rally is under a substantial threat in Europe and the US. That's because major stock indices have started to break below critical price levels. The question that investors and traders are asking themselves is how big the influence will be on the stock market and which sectors of the economy are likely to be hit the hardest. In European markets, it is a real bloodbath today. All major stock indices such as the DAX, CAC 40, Stoxx 600, and Stoxx 50 are having the worst day since July. The UK's FTSE 100 is getting badly battered, as investors believe that it is only a matter of time till we see a national lockdown, as targeted lockdowns are already in place. The DAX, the German stock index, has crossed below the 50-day moving average, and it is running toward the 100-day moving average on the daily timeframe. The UK's FTSE 100 index has been the weakest link during this coronavirus stock market rally. It is already trading below all the important moving averages 50, 100 and 200-day SMA. I believe there is a strong chance that this index could touch the COVID-19 stock market crash level. As for the US stock indices, things are looking a lot murkier today. The Dow Jones Industrial Average is trading down more than 700 points. On the weekly timeframe, the Dow Jones has recorded 3 consecutive weeks of losses. The situation is very similar for the S&P 500 and for the Nasdaq Composite as well. Sadly, it seems like this stock market crash is still very much in its beginning stages, and there is a lot more pain to come for this coronavirus stock market rally. Expect more of a sell-off as a result of the restrictions which are likely to be tightened not only in the UK and Europe but also in other parts of the world. This means that while one country may be coming out of its mini-lockdown, another one may be just going in. What does this mean for economic sentiment and consumer confidence? Consumer confidence and economic sentiment will bear the brunt of this, and this time around, the economic conditions are already weakened, even as ample measures to ease the pain have already been used. That means there is less of a cure left to use on an already weakened patient. Given that there may not be any cohesive response, the road to recovery may become even longer.